Welcome back. We're almost an hour away from the opening bell on Wall Street for Thursday. Markets are higher across the board, led by tech. The Nasdaq right now is up better than 2%. It is up 620 points, followed by the Dow, which is up 50 points, and the S&P up 47. Interest rates this morning are higher ahead of a busy day of economic data. Take a look. The yield on the 10-year is up almost 3 basis points at 4.41%. The Fed's preferred read on inflation is out this morning. That's the May PCE index out in about 5 minutes. Economists expecting an increase of 0.5% and 4.1% year over year. We'll also get the final read of first quarter GDP out in a moment. Economists expecting growth of 1.6% for the GDP. Joining me now is the chairman and CEO of Strategas, Jason Trennert. Jason, great to see you. Thank you so much for being here. And I saw you the other night at the Scott Bessent talk at the New York Economic Club. And he gave you a shout out about your common man inflation metric. What are you seeing this morning and today in terms of inflation? What are you expecting in terms of the data?
Well, I think, Maria, I think the idea is that you don't want to tighten into a supply shock. When I've been seeing clients yesterday, I've had a lot of discussions. A lot of people have interpreted Kevin Warsh's comments very hawkishly. We think here, myself and Don Rispel, our chief economist, that that's a mistake, that Kevin Warsh is going to look to see the productivity come through from all of this capital spending in AI and elsewhere. By the same token, affordability remains an issue, and that's being reflected in our common man CPI, which just counts things that people have to buy. So it's food, it's energy, it's shelter, it's insurance, children's clothing, that type of stuff. It doesn't include anything that's kind of discretionary. And there you're showing that people are behind. If you're looking, because inflation is cumulative, inflation has run much faster on a cumulative basis than wages. And that's what's causing, I think, a lot of this hand-wringing and gnashing of teeth about the general price level.
Yeah, but I mean, look, Jason, the Federal Reserve left rates unchanged, and you mentioned Kevin Warsh's first meeting as chairman, but you still had those 9 Federal Reserve officials saying that they expect an interest rate hike later this year. So how did you read that?
Well, from what I hear, and this is, I would say that this isn't anything that's verified. I have no special information, but I do think there's some internecine battles within the Fed right now. I think that the relationship between clearly President Trump and Jay Powell was at the end not a good one, and I think he has his supporters and he has his detractors. And Kevin's coming in, and he's much more the president's guy here. So I think there's a little bit of that going on, unfortunately. But I also think we have to be prepared in some ways just to have closer votes, just as things get harder, as inflationary pressures are still in the system. You're not going to necessarily have complete consensus. And not that we want to be following the Bank of England, but Bank of England, for instance, has close votes all the time. The market seems to deal with it pretty well. And I think it's not the worst thing if there are disagreements. I think that's the way it should be. I get nervous when people treat this like a hard science, like chemistry or physics or something, because it's never that. This is a social science. You're dealing with people. It's never the same 2 times in a row. And it's good to have a healthy discussion as opposed to just a rubber stamp of the chairman.
So we got to talk about oil this morning, Jason. We're breaking $70 a barrel. Prices are now at the lowest level since before the start of the Iran conflict. Oil now flowing through the Strait of Hormuz as the U.S. and Iran remain in negotiations. Energy Secretary Christopher Wright spoke at the Reuters Global Energy Forum yesterday. Here's what he said about traffic in the Strait. Watch this.
I could say roughly 72 ships in the last 24 hours and 20 million barrels of oil. 19 million barrels of oil the day before, 18, 16, 15. The one thing that will delay things a little bit is, unfortunately, the Iranians mined the ship channel. To return to complete normalcy takes a demining of the strait, and that's probably a few weeks' effort. Iran will not have the ability to close the Strait of Hormuz going forward. That's a critical thing. That's their key leverage, and we're taking that leverage away from them.
Jason, how significant is this move lower in oil?
I think it's very significant because myself and a number of other people, frankly, have been shocked at how quickly it's come down. The president said it's going to drop like a stone, and it has. And that's somewhat surprising to the extent to which there's a fair amount of capacity that was taken out during the war, particularly in natural gas. So the fact that prices are coming down so quickly means that we figured out a way, or the system has figured out a way to keep the oil flowing. And I think that's a very positive sign. And then, as Secretary Wright was talking about, it should just get better if once you clear the rest of the strait.
We are waiting on this economic data. We got markets higher this morning. How would you assess the macro story right now?
Listen, I think Maria, I think the macro story is quite strong. And I think, not to get your clues just from individual companies, but there's been a lot of consternation regarding all of this AI CapEx. But as we saw last night with Micron, there are not a lot of signs that this is slowing. And I think, going back to also what the Fed is going to do, I think the Fed's going to wait to see the productivity gains come through before they start tightening in a meaningful way. And that's important, because I don't think you're going to short circuit this growth that you're seeing in the economy. I think they're going to be patient and wait to see how this works out.
Jason, we're going to get to Cheryl with the numbers. Hold on. Cheryl Cassoni with all the data right now. Go ahead, Cheryl.
Got a lot of data, but I want to lead with GDP here. For the final read of Q1 GDP, we came in at 2.1%. Now, the estimate was 1.6%. Remember, we got that big surprise on the last reading to the downside. Well, the number has gone back up. Now we are at 2.1% for first quarter GDP. Now getting into the PCE price index, again, inflated numbers. We're talking about the Iran conflict. Month over month, a gain of 0.4%. Year over year, 4.1%, in line year over year. Core month over month for the PCE price index, 0.3% to the upside. That is in line with estimates. And then core year over year, 3.4%. That is also in line with estimates. We saw a dip in durable goods for the month of May, a loss of 4.5%. If you strip out the transports, though, you get a gain of 1.3%, which is better than expected. Core cap goods coming in 1.6%. That was better than expected. Taking a look at claims, they fell actually below the estimates, 215,000. We were looking for 225. And then income and spending, real quick, last numbers I'm giving you here, Maria. Both of those coming in higher than expected. Income coming in 0.7%. We were looking for 0.4. Spending coming in 0.7%. We were looking for a gain of 0.6%, Maria. But again, that GDP number is the real volatile one that I wanted to point out to you.
Yeah, I mean, the GDP number looks good, actually. Jason, final word from you on this data. Jason Trennert, with a 2.1% growth story for the GDP in the first quarter, what does the rest of the year look like to you? Here we are in the halfway mark.
Yeah, well, and the second quarter looks like it's going to be about 3%, according to the Atlanta Fed. So I think it's pretty strong. You're looking at nominal GDP growth, the way normal people look at growth, of probably somewhere around 6% for the year, 5 to 6%, which is pretty good. And the mix is pretty good too, which is to say it's growth. It's not all inflation, it's growth as well. And I think it bodes well for the economy for the rest of the year and the markets as well.
All right, we will leave it there. Jason, great to see you. Thank you.
Great to see you. Thanks.